What's going on, everyone? Welcome to module number 9, which is the last module in this day trading course. I'm going to be covering everything related to journaling. I'm going to explain to you guys why journaling is so important, why it is essential that you do this on a daily, weekly, and monthly basis. And then at the end, I will show you some trades that I took yesterday and how I actually save those trades and how I journal. All right. So point number 1, journaling makes your edge measurable. So most traders, they operate emotionally and not really statistically. So journaling really forces you to record and save your entry, your stop loss, your targets, your R multiples, and the reasoning for every single trade. Now, over time, after you do this for weeks and months, this builds a personal database that reveals which setups consistently make money and which ones drain your account. So you can cut out all those stupid trades and all those losses and actually have more profits. Because without this data, you're basically just guessing, right? And guessing really doesn't scale or compound your account. Point number 2 is it brings hidden patterns to light. So you will notice recurring behavior that you would never catch in the heat of the moment, right? This could be entering too early, exiting too soon after a win, over trading after a loss. It could be moving your stop loss to break even always too soon because you're scared of losing. Many different things, and you need to write all these things down. So these patterns are usually responsible for the majority of losses. That it could be tiny, small details that you just keep repeating over and over again. And if you would be able to spot that and you see that this is the cause of many losses, once you are able to cut that out, you can see a massive change in your profitability. So by seeing them clearly, you can actually build specific rules to eliminate them. Point number 3 is it really sharpens self-awareness and emotional control. So trading obviously isn't just technical, it is very psychological, I'd say. When you write down what you were thinking and feeling before, during, and after the trade, you will start spotting these emotional triggers. And trust me, you will have them. Many people, they have fear of losing, fear of missing out, greed. These are all psychological issues and thoughts that come in your head that can really screw up your profitability, because it can just be in the details. So over time, you can anticipate and neutralize them. And this is how traders stop repeating impulsive mistakes and actually build real discipline. Now, point number 4 is it accelerates your growth through structured review. So reviewing your journal, every day, every week, and every month will give you focused feedback, right? Instead of just slowly improving through random screen time, you deliberately target the 1-2 key mistakes holding you back, because I said it's really in the details. If you have a solid edge and you are struggling to be break even, you're very close to it, and you feel like you're very close to becoming profitable, there's a couple of small details and mistakes that you just keep repeating that basically hold you back of having those gains. And this really shortens the learning curve dramatically. So professionals, they evolve just very fast because they learn aggressively from their own data, and they're not scared of it. Like, don't have to be scared from your mistakes. Like, if you notice a pattern in a certain mistake that you make over and over again, then once you accept that and you realize that and you say to yourself, listen, this has been a mistake that I've been making for quite a while, and I feel like that's the thing that's holding me back of making more gains, well then just cut that out, and you don't need to be scared to write down your mistakes. It's actually good for you, and you will just realize everything so much faster. You will cut down your learning curve a lot, and you will just become more profitable a lot quicker. So don't be scared to review your mistakes. And last point is it turns you into an actual professional. Okay, so journaling is what really separates the amateurs from traders who treat this like a business, right? Because businesses, they track performance, they analyze the results, they refine their strategies, and journaling is literally your version of that, right? It builds accountability, structure, and just a very repeatable and professional process. Because without it, to be honest, you'll just stay stuck in cycles and of emotional trading and hoping instead of executing with precision. Okay, so there are 2 tools that you can use. Me personally, I use the Notion calendar. I've been using that for quite a while now. I think it's very comfortable and easy to use. Obviously, it's free, and if you want to use a paid version, you can obviously use TradeZilla. I've never used TradeZilla, but I've seen that it's obviously the best platform out there. So very soon I'll be changing over to TradeZilla. But in Notion, you can do this as well once you start out, so you don't have to spend money on a journal. As you can pretty much do everything you want on this Notion calendar. So let's head to the Notion calendar, and I'll show you an example of a trade, well, 2 trades that I took yesterday. So as you can see, I had my pre-market plan. This was the pre-market plan basically that I had for yesterday. So obviously everything was very bullish. The pre-market was very uptrending, and I had a couple of demands. And in the end, we came down to demand, and I was able to find some trades. So I'll show you the first trade, which turned out to be a break-even trade. So here in Notion, you can add all these kind of tags. So if you click on that, you can have a whole list of all these kind of tags. So yeah, it was a buy trade. The pre-market was uptrending. It was an M30 demand plus a M1 double bottom plus retest entry. So as you can see, the level that I used to trade off, this was the demand that I had, and I would take a screenshot, either the M15 or the M30, whatever you want to do, just to see the level. And then the entry right here, we had this M1 double bottom, and then price went up and then retested this structure over here, and then I entered at the 20s with a 3-point stop loss. And I wanted to take partials at this level right here, but I wanted to see a little break above. As you can see, this candle right here, I wanted to see it break above, and literally just tapped in with the spread. Obviously, it still didn't pass this level, so I didn't take partials. And my main target wasn't here; it was the top of this M1 range. And then obviously after this move up, I was about 6 points in profit. So yeah, I moved my stop loss to break even, and I got out break even at this level right here. I used the order flow as well to enter this trade. As you can see right here, this is my entry, which was the retest of this structure right here. This was a very clean entry. Everything was good. It's just didn't go to my target. Basically what I would write here as well, there's nothing really too much to write. Everything was perfectly executed, so it was just a good trade. Just didn't tap my partial level. Then I took another trade a little bit later, which was also obviously a buy, uptrending pre-market, same M30 demand, but this time it was with a M5 double bottom entry. So let me show you the level. You can see it was the same level again, just a little bit later. It was an M5 double bottom. We had this M5 low. The market came back down into this range, and then I entered here at the 21s with a 3-point stop loss. And I wanted to take partials again at the same level where it has been struggling. So I took partials there, and my main target was right here, again, the same one at the top of this consolidation range. And yeah, I just missed it by literally half a point. So that's why I only had 1 hour on this trade, just took partials. And then later on, obviously price reversed and took me at break even. Okay. So for this as well, I use the order flow. So my first entry was right here, right on this big green bubble. This was my first entry. Then price came back, tapped me out break even, and then a little bit later we had the M5 double bottom pattern, and this is exactly where I entered right here in this green bubble at the 20s. And very good entry. Again, pretty much no drawdown, same as this trade. Stop loss, 3 points, gave it some room, and was able to take partials and very close to my target, and didn't hit it. So here you can see I took a screenshot of the level of the M5 as it was an M5 double bottom, and then also on the M1 just to show myself basically how the M1 was. This is where my first entry was, and I got tapped out break even. I didn't see any pattern right here to enter, so I was waiting for an M5 double bottom. Then with this confirmation here, I got the M5 double bottom, and this is where I entered, and price pretty much flew very aggressively upwards. And my mistake here was just being a little bit too greedy. As you can see, price was quite choppy. It was volatile, it was moving very quickly, but it was still very choppy. And I thought that once it breaks this 26 level, all these wicks over here, that price will fly up very aggressively and could potentially be very bullish. That's why my target was a little bit further. My target was here, this one, and I also had this level right here as a target, but as soon as I saw, I just thought to myself that when the 26s or 26.25 breaks, I can really feel this flying up, and I mean it did quite aggressively, but not for a big move, and then it completely reversed from this little consolidation range. So this was a shame. If I would have gone out at this target, being less greedy and analyzed the situation a little bit better, as price is very choppy, I would have gotten, well, around 3R, maybe 2.75, 2.80 instead of just 1R. But you know, it is what it is. That's why I wrote down also very good trading execution, was targeting the top of the M1 market structure supply, but went half a point shy of it and reversed. Maybe I was a bit greedy with this take profit, just saw price being very volatile and thought once it passes the 26s, price could fly hard. Should have targeted 30s for full TP, as the market also obviously was still quite choppy, right? So this is basically how I go about journaling. I will do this every single day. Obviously today I will do my pre-market plan. I will do this every single day. And then I would review my trades like this, as you just seen with the result. And then by the end of the week on a Saturday, I would write down the total RR of the week. Just say total, whatever it is, 5R, 6R, 3R, doesn't matter what it is. Whatever the result is, just type in here. And then I would also write down, so let's say right here, let's make an example. Or is this not working? Anyway, I don't know why it's not working. Okay, here you go. So let's say we finish 5R for the week. I'll just do 5R. And then here I would write down pretty much my review of the week, what I think I did right, what I think I did wrong. Psychologically, did I make any mistakes, or was I really good mentally? Was I patient? Did I have fear of missing out on some moves? Basically, I would write down pretty much everything that comes to mind of what I think I did good or what I think I did bad during this trading week. All right. So this basically in this module, I pretty much showed you how I journal. I think it's very important that you do this, in this way and in depth as possible. You can also, instead of doing screenshots, you can make a video if you want. You can use tools like Loom, for example. With Loom, you can just very easily record your screen and yeah, just have a video in there if that's what you like to do. But I like to see the screenshot so I can easily just go back and see if there's something that I can adjust, right? So anyways, guys, I hope you liked this last module of the day trading course. I hope you enjoyed the whole full course. I might be doing a full order flow series as well on Bookmap on YouTube and show you basically how I use that to combine that with the entry patterns that you have learned in this course. All right. So anyways, I hope you liked this video. If you have any questions about any module related to the course, just let me know in the comments down below. I'm always more than glad to help you guys out. So thank you guys for watching, and we'll see you in a future video.